Hello traders, it's Samurai Trader here. Welcome to this training video, how to identify high probability reversal trades. I'm going to be covering a lot of information in this recording, so I'd recommend if you make sure you've got a pen and your trading journal handy so you can take notes. And please remember that the strategies and ideas work on all time frames and all markets. So if you're a forex trader or a stock trader, it really doesn't matter, or a futures trader, which market you trade, a pattern's a pattern. Now, there's a great book by a trader called Trader Vic, Methods of a Wall Street Master, and what he says in the book is where fortunes are made identifying a change of trend. And of course, you would have heard, if you're a member of the Day Traders Fast Track program, you'll hear me state time and time again, please do not counter trend trade or look for trading change of trend until you're consistently profitable as a trend trader, and you'll see why very soon. However, there are fortunes made, and if you're good at it and you get to master the patterns, you can do very well out of them. Now, very quickly, we will be going to some charts very soon, so I'd recommend you go to full screen, bottom right hand corner. You can click on that and you'll be able to go to full screen. As always, I do need to put the disclaimer up. There is a risk in trading. If you haven't read the disclaimer, if you're new to my videos, please pause the video and make sure that you do read the disclaimer. If you're a current member of the Day Traders Fast Track program, you see this on every one of my videos. Also, very quick advertisement. I promise traders I'll be very quick. You can request my ebook, The Truth About Day Trading, by going to the download link below, or also requesting my free training manual. Let's see here, and of course, if you're a member or if you join the Day Traders Fast Track program, many of the ideas and strategies that I'm about to cover with you, I have very comprehensive cheat sheets, downloadable PowerPoints, and there's actually over 300 training videos now in my entire program. But specifically the T3, which is our price extreme strategy, which works absolutely fantastically. It's a mean reversion strategy. Your T7s, which is your double tops, double bottoms. I've got specific training videos and cheat sheets and PowerPoints on those. Your T19, which is your standard divergence, and your DDs and the 2Ds, a double divergence, which is an absolute killer if you're a counter trend trader. And last of all, before we get into content, if you haven't subscribed to my channel, please do. And just remember, for $197 you obtain my entire program, including indicators. Visit my website for more information. There's nothing else like this in the market. For $197 there is no upsell, there's no coaching programs, everything is included, including full email support. Okay, that's the end of the promotion. Let's get into it. Let me talk about the negatives first of all. You've probably heard the saying, the person who catches two rabbits catches none. And when we go to the charts in a moment, we will see this. One of the challenges is that when you're trading counter trend or attempting to take counter trend trades, if it fails, quite often you'll miss out on a really good trend trade. And this is where you need to be either very quick or to really make up your mind, which type of trade are you after. Even better still, if you go for the best of the best, and that's really what this video is about, is showing you what are the best of the best. But the warning I wanted to give here really is just be very cautious. And I tend to find that when you're looking for counter trend trades or a change in market direction, we tend to lose sight and to lose focus on looking for the trend trades. And I still say to this day, the trend trades are the safest trades you can possibly take, but there are some great counter trend trades. And I'm sorry if I'm confusing you here with these statements, but it's very true, and any experienced traders know what I'm talking about here. And my last statement here is tops and bottoms are so attractive because they look good in hindsight. It's very easy to go back over a chart and say, all right, I would have got in here, would have got in here. But when you're on the far right hand side of the screen of your chart, things look very differently. Now, Jesse Livermore quoted this, and I love this statement. After spending many years in Wall Street and after making millions and losing millions of dollars, I want to tell you this: it was never my thinking that made the big money for me, it was always my sitting. And that is where it's just so important, traders, that if you're going to take counter trend trades, that you wait for the best of the best. I'm going to be giving you some invaluable tips, and this is where it might even pay you to pause the video. Members, of course, you can go into the members area and you can download the cheat sheets and the PowerPoints, which will give you all of this information. But for the general public watching this, if you're not a member, I want you to really take note of what I say and jot it down. It's very, very important. Now, in the end, our business is about pattern recognition, and epic traders are great at pattern recognition. And that's, in a way, a great thing about trading, is that learning patterns, they're not difficult, but that is what it's really, counter trend trading is about, is looking for the patterns that set up. Now, in mastering the trades that I'm going to be showing you today, I want you to remember what I call the rule of 100. Test your idea or test the pattern over a minimum of 100 trades, going back over the charts, then in sim, then before you go live. Very, very important. And that's, I suppose, one of the greatest challenges that I have with traders today, is I now have thousands of traders around the world that are members, is lack of patience. And you know, as Mark Douglas talks in his excellent book, he talks about really being patient, and that is and by the way, it's in the book for Disciplined Trader. He talks about this, is having the patience. And as he said, what's the rush? The market's going to be here next week, next month, next year. And also, when you are patient and when you follow the discipline rules of, say, back testing over a minimum of 100 trades before you go to sim, then maybe 100 in sim before you go live, it's also teaching you discipline, which is perhaps one of the key cornerstones of becoming an epic trader. So the setups that I teach you, go back over 100. Very, very important. Now, first of all, one of the most important rules of staying out of a potential divergence trade is this: do I have a strong trending market? This is where it's easy to get absolutely hammered if you're a counter trend trader or trying to pick a top or a bottom. And I want you to think of flashing red lights when considering a divergence trade in a strong trending market. And I'm going to give you, when we look at the charts, a couple of heads up and things to be watching for, and a couple of really important tips that will really filter out the bad trades. But just really watch that. So I want you to jot that down. If you're in a strong trending market, you know, once again, just be very, very aware. It's really easy to be chopped up in those circumstances. So let's now go through some key considerations of trading divergence. Do I have angulation? So we're going to look at this, and I've marked up some charts for you. Very, very important, and one of the key ingredients or the key rules for a successful counter trend trade is when you've got great angulation. The greater the angulation, the better the trade. Do I have three mountains? Now what I mean by that, and we'll see this on a chart, where I go 1 in a trend, 2 and 3, that is, the more waves you've had in a trend, the more likely you are to have a correction or a change in trend. So if you've got 3 hills or 3 mountains or 3 great waves, you are more likely to be heading towards a successful counter trend trade or a change in trend. So remember, when we're trading a trend, the best metaphor I give, or analogy I say to traders, we're like great surfers. We're looking for those waves. So after you've had 3 waves, you're more likely to be heading towards a correction. Now likewise, do you have a double top or a double bottom? The market loves to test things twice, and quite often a good double top or a good double bottom is a good indication of a change in trend. So I want you to be very aware of those, particularly when you formed a new high or new lows, and you formed, so you've got a new low and you form a double bottom, or a new high and you form a double top. and combine that then with a key indicator such as an oscillator, well, it's just once again a great combination. We'll look at that in a moment. Do I have a pivot bounce? Specifically, I really like floor pivots, and I'm going to be showing you an example with that. So when you have pivot bounces and divergence, and you've made either a double top or a double bottom, or I've got divergence on price, fantastic. Okay, that's a great combo. Do I have a fanning of the EMAs? Most of you are aware, and of course if you're a member you're very aware, that I love to use a combination of 3 to 4 EMAs. When they are fanning apart and I'm getting angulation, that's also a great indication of a great potential divergence trade. Am I at a major support resistance area and I get divergence? Fantastic. Do I have a trend line break? So I've had a great run, I've had a trend line break, and I love to use fractals, and those of you that haven't seen my videos on fractal breaks, and I talk a lot about those, it just makes confirming a trend line very mechanical. Recently I've started using, just as a visual tool, an ATR stop and flip, and unfortunately I only have it for TradeStation, so I'm using a very tight ATR stop and flip. Now it is something else on the screen, but it's just a nice, if you're busy, if you've are looking at a lot of screens, it's just another visual tool. And so for TradeStation users, of course I provide that. For those that don't use TradeStation, just use the trigger line, and we'll look at that as well. Do I have a rising or falling wedge pattern? We'll look at that when I show you a chart. And what is the anchor chart telling me? If I've got divergence on my entry chart, what we call my EC, and I have divergence on the AC, the anchor chart, start rubbing your hands together. It's what I call a 2D. When I have a double divergence, fantastic. Okay, it dramatically improves the chances of my trade being successful. So we can see here that this is just from an old PowerPoint from years ago, but we can see we've got a nice double bottom here. Now if that was at support, such as a floor pivot, fantastic. Now of course a double bottom or a double top can form its own area of resistance or support, but at times you'll get a double top or a double bottom at a floor pivot. If you have it at a floor pivot, right, that probably adds an extra 10 to 20% towards a probability of that trade coming off. So you may have standard divergence on an indicator. So you have a high in price, you then have divergence on your indicator, fantastic. But when you've got great divergence and it's tried twice, okay, it's even better. So you really want to understand the principles behind double tops and double bottoms. Now then we have our triangles and wedges. Now when we then get a wedge, and price is what I call coiling, okay, so usually when we have a rising wedge, price action will usually collapse, price action will usually run to the long side. So this is where drawing your trend lines is, and just really developing the habit of drawing in trend lines. It just makes spotting a great divergence trade a lot easier. Now for those members that are familiar with fractals, usually at these points here, here, and here, likewise here, and here, we would have a fractal point plot. And those are the points that I draw my trend line on. It's an indication that, of course, quite often we'll see a lot of false breakouts, but when you've got some additional tools and some other things that we'll look at, it just makes it easier for confirming a divergence trade. Now here we've got a rising wedge here. Now in this particular case we haven't formed a new higher high or a low, but you'll still see a lot of these wedges still work out. So you've got prices is starting to coil. It's you basically, a wedge is a trading range. So you can see here we're getting it tighter and tighter in our range, and finally pressure builds and we break to the short side. So just get used to looking for these patterns. Now Vic, in his book Methods of a Wall Street Master, the New Market Wizards, he's been written about in the New Market Wizards and Super Traders, and I mentioned his book The Methods of a Wall Street Master Trader. He shows two patterns, which is your classic pattern, but in this particular case he's not showing the use of an oscillator. So if you look at this, so to buy long, we're simply looking for, these are what I call two hills, and you'll quite often hear me talk about two hills. Here's your first hill, it comes down, rises, all right, market fails again. Here's your second hill, then you get a break here, and away we go. Now this, we know, of course, is fairly classic. We will then have an oscillator, we'll have divergence as well. So you've got two confirming, and we'll look at a pattern in a moment. You'll see this here. So this is directly out of his book, where you'll see this pattern. And so you've got decent retracement, close above a new high, no follow through, close below the breakout low, short below the low, target the major swing low. So you might have had a swing low way down here, stop above the breakout high, which is just here. Fairly classic patterns, but you know what, it works. However, what is very, very important, traders, is that you make sure that either you've got great angulation and that you're not in a strong trending market, because you'll see these regularly in really strong trending markets, either to the long side or the short side, where you get this great setup, but you can still be hammered, smashed by them. So you want to be very cautious. Now this is typical, and this is the same pattern we were just looking at, except using an oscillator. So we've got a lower low on price with a higher low on our oscillator. Likewise here we've got a higher high on price. So this is our classic T19 setup. So we've got a lower high. Now you can still take them, by the way, if you've got a double top on your oscillator and a double top on price action, but better probability. And by the way, if I had a double top on price and I've got my divergence, that's still fantastic. I love my double tops and my double bottoms, but I really want to see divergence on the oscillator. To me, that is very, very important. So let's go and have a look at the chart. So we'll start off with just a setup. So I'm actually a setup that I saw as I was preparing for this video today. So what we're looking at here is the Australian dollar 55 tick chart. So this is during the Globex session. All right, so I'm recording this at 2:53 p.m. in the afternoon, and we can see here that so this is during the Globex session, what we call the Asian session. We can see here that we've formed a new higher high. So here's one hill, comes down, we then get a bounce, two hills. So I've got a high high on price, and I've got a lower high on my MACD. Now the MACD I use is a zero lag, and so a zero lag, and it's got a very sensitive setting. So I love zero lag MACDs. But what makes this good, and by the way, when you're trading the Aussie dollar, the CME futures currency contract, it's $10 per tick, where if you're trading, say, the euro or the yen or the pound, it's $6.25 a tick USD. So the Aussie dollar is $10 a tick. Now when we take these divergence trades, always be prepared for a bounce off the major EMAs. All right, now here we've broken through, so this is good. Okay, we've got a good move. Now here we've got divergence, but on my anchor chart I've also got a divergence, and that's what I call a 2D. I love it when I've got a 2D. It dramatically improves the probability of the trade coming off. Now let me just go here and to the other charts I wanted to show you. So what we're now looking at is gold. Now remember, it doesn't matter what market you're trading, whether you're trading for Forex markets, futures, stocks, it really doesn't matter. The same patterns will set up. So I'll just run through some of these. So we can see here that we have a saying in our business, follow the gold. So we can see my gold EMA. So if we're under the gold, we want to be looking for shorts. If we're above the gold, we're looking generally for longs. Now trading is not, it's really, there's lots of gray areas in trading, and you'll hear me say close enough is good enough, and it truly is. For an example, if I'm looking at a double bottom or a double top on a day trading chart, so this is a 144 tick chart, if I'm within 2 ticks, for me that still qualifies as a double bottom or a double top, and in this case we are within 2 ticks. So here I've got I've got divergence. So I actually had an entry point here. I've got a low, a new lower low, and here I had an entry here. We can see we then got a bounce off the EMA. We come back down. It could have formed a, well, for me it is a double bottom. I call it a double bottom. And we can then see, traders, that it then bounced. For me, I call that a double bottom, and up it went again. And just be aware of the bounces off your major EMAs. So we travel along here, and in the direction of my trend, of the overall trend, I now have a new high with a lower high on my MACD. So I have an entry. This actually comes down and it forms a great double top, and I have divergence. Thank you very much. Now of course gold is $10 a tick. Now I'm a scalper, so I'm quite happy to pick up 5 ticks. Okay, that's what scalpers do. We then have what I call a snapback, which is a mean reversion trade. We can see here that price is gapped right away from my trigger line. And these, by the way, on gold, I love snapbacks. We call them T3s on gold, on CL. You can get, they're not quite as good. You'll get some good ones on NQ, but sometimes you need to wait for your second entry. So you want to go have a high 1 high 2 or a low 1 high low 2 strategy. But snapbacks can be great, but it's still a counter trend trade, and there we had a really great snapback. Here we had another great snapback. These are all change in trend strategies. Here we've got a new high on price. I have divergence, and here, by the way, I've got slight divergence. You can see it there as well. Thank you very much. I then have set up another snapback. Okay, you can see clear separation of price. Divergence. I've then got a big picture double top, and the market falls. Okay, falls away very nicely. Now here, this is where it's very easy to be hammered taking counter trend trades, and you can see here I've got here the comment very untidy. Notice here we do have divergence, but just be aware that when you're in these channels, this is almost a tight channel, and your entries very close to your major EMAs, time and time again you'll bounce off them and your divergence trade will fail. So just be very cautious there when you've got a channel and price action is very close to your EMAs. Coming along here, okay, and you can see how mechanical it can be. I've got a high on price, lower high on my MACD, great, and we get a bounce. Once again, you only would have picked up 5 ticks, but that's mighty fine. It's a very rules-based mechanical trade. Up here I then get a double top forms. It's not perfect, and if you set this one out, I could understand. So that is one. However, it's still a double top. Time wise, the afternoon's nearly over, and that's when we then, yeah, that's right, so it's the end of the session. Let's go and have a look at the, what other market was the NQ. That's right, I was going to show you the NQ. So let's have a look at the NQ, and this is where we look at angulation. Now let me scroll back a little. Okay, so we'll look at the NQ 144 tick. So this is actually 904, so the market doesn't open till 9:30, so price action is a little slower. Now here, this is what I would call this a double top, triple top, whatever you want to call it. So see, price action has come up. We've tested this high a number of times there. Notice how my MACD has fallen. Okay, here is my entry just here. Thank you very much. I then have a double bottom formation form here. Notice how my MACD is rising. Now on a standard MACD, of course, this is, you wouldn't be getting these sensitive entries, but I do love my tight entries here. So we've got a double bottom. Now this is where you've got to be cautious. If we look at this one here, we then get to 918. You've got a high on price, you've actually got a lower high, but then you bounce straight away and then come up. You may have chosen to take this. We then formed a double top, and these are some of the areas where you can be chopped up badly, and I'm going to be showing you a bit of a solution here. One of the things you can be doing or looking for to minimize these false entries. So this is the first rule we want to be looking at, is what we call good angulation. So let me explain this here. So what exactly is angulation? Angulation is where you see price action moving away at a great angle away from your major EMAs. That is what we call angulation. So effectively we've got a wedge formation. So you've basically driven a wedge, price action is risen. Okay, so here we've also got, this is the first wave out of 3. So you've got great angulation, so you could take that as a short. Now remembering, always whenever you take a counter trend trade or a divergence trade, be prepared for a bounce off the EMAs, and which is exactly what happened. So this is a great scalping opportunity. What you've also got to be aware of, and you may remember I mentioned earlier that he chases 2 rabbits, catches none, and this is one of the points I wanted to bring out. It's right here. You had a little time, but where do you actually get out? So if you had have taken this as a short, you could have easily scalped your 7-8 ticks, maybe 10. I haven't measured that here, but then you had a great trend trade setup. Now quite often though, you'll have these by the time, and you actually had one here, you had divergence, you had another potential entry. Now here the ATR kept me out of it, so that's another story for another time. Well actually I may as well, sorry, I should mention that the ATR remained blue, so here it told me that the average range was to stay long, so it would have kept me out of that one, but I still may have got in here. But what I've got here is I've got no angulation. Notice how price actions moved away nicely here, so you would have been stopped on this trade. Now here, this is where we're starting to get interested, particularly if I don't have great angulation, because I've had one wave, 2 wave, and now a 3rd wave. So the probabilities increase for a successful counter trend trade after I've had 3 waves, which is exactly what I had here. So 1 2 3, wait for 3 waves, or wait for great angulation. Now another great setup that you'll see regularly is when you get a double bottom or a double top with the trend. So I had divergence, double bottom with the trend. Now it didn't go too far, and by the way, I mentioned the NQ here. Different markets have different personalities, and so get to know the personality of the market, because you'll quite often find it's very different. So here you've got a double bottom here in the direction of the trend, but you'll see this fail quite often anyway. With NQ, you just got to watch the NQ. It has it's different to say gold, CL, etc. Once again, as I say continually, get to know the personality of the market. Here we've got another great setup. We've got here, you've got angulation, so prices come down. This is actually a T3. It actually failed. Then you got you had no divergence. Here we've got divergence, and notice angulation. Once again, angulation is where price is angling away from my major EMAs. So that set this up very nicely. We come up here. I've got great divergence, a lower high, higher high on my price. Thank you very much. We'll move along. We've now end up forming a big picture double top. Now big picture double top is when I go over an extended area, I call that a big picture. So I love, as many of my traders know, I love double tops and double bottoms. So here we've got a big picture double top. So this is over a much larger area, okay, and that worked out very nice. Moving along here, what other ones have I got here? Now this is what I wanted to point out. Here's another case where we had a divergence and it failed very quickly, and you actually had a couple of waves here. So you could have said 1, 2, then finally you've got your third wave, and it worked out mighty fine. So let me just show you something here. So as soon as I get 2 points, and see my black dots, these are fractal points. Here's what I do. So let me just show you this. This is very important that I'll do this. So here I've formed 2 points. I then want to form a new parallel line, which I'll bring up here. So at this stage I've just got 2 points here, and we can just want to watch channels. And if I extend this, so at this stage here I would only had these 2 points, I'd then extend to the right, and we can see what happens here. And so price action come up, we bounced again, we rose. So once this has happened, I've formed this, I then form this as I'd extend this parallel to the right. Price action comes up and tests the upper channel, and finally it fails. But the point I wanted to bring up here is this: when we form a channel in a tight trend like this, where we bounce off the highs, so you sell the highs, you buy the lows, sell the highs, buy the lows. But once you've had at least 2 to 3 waves, get ready for, you will probably heading towards a breakdown at last, which is what happened. So be very cautious with divergence trades when you've got these channel formations. Hopefully this makes sense, and of course we cover this in the Day Traders Fast Track program a great deal. But draw your channels in. It's just a good indication of what may happen. Now also back onto these, as I think I mentioned, this is where you take these and you quite often then miss the trend trade, because by the time you get stopped, so if you take this short, and I should mention this, I apologize, I've mentioned it, where would my stop go? 2 ticks, 1 to 2 ticks above this swing high, 1 to 2 ticks above this swing high. So by the time you if you got out of this counter trend trade and jumped on the trend trade, the move's already well and truly underway. So this is one of the challenges in focusing on taking counter trends. You miss out on a lot of really good trend trades, so you've got to be quick and able to recognize these. Here, moving along here, we then had a price action. This is actually a T3. You actually ended up forming support, or I'll call this a double bottom. Yes, one could call it a triple bottom, whatever you want to call it. But we ended up with some nice divergence over here. We end up with a nice double bottom again. Now notice here my indicator is basically giving me the entry signal. Now of course some traders just don't like using indicators. Well, here they're a great tool to use. So what I've done, traders, is very quickly over the last 33 minutes run through some of the trading rules. Now you can do very well in trading divergence. The secret there is to really understand and learn the pattern. Very important, traders, you take the time, is that when you get a great T3 or a double bottom or a double top or a great, we call them T19s, a true divergence trade, you can do very well out of them. But I recommend the traders stay away from counter trend trading until you're consistently profitable as a trend trader. It is easier to make money trading with the trend, but you can make a fortune counter trend trading as well if you understand and master the patterns. So once again, if you haven't subscribed to my channel, please do. Please visit my website, become a member, and I look forward to seeing you, or hopefully you look forward to hearing me on the next video. Thank you, traders.